All right, let's talk about the Swiss franc, the CHF. It's a huge player in the global currency markets, and it trades 24/7. But here's the thing, just because you can trade it any time of day doesn't mean you should.
And don't underestimate its importance. We're talking about the fifth most liquid currency in the entire world. That's a big deal. It means every single day, enormous amounts are being bought and sold, putting it right up there with heavyweights like the US dollar and the euro.
Which leads us to the million-dollar question for any trader, right? The market is relentless. It never sleeps. But you have to. So how do you find those sweet spots, those moments of peak action, without having to glue yourself to the screen all day and all night?
Well, guess what? There is an answer. And it's not just about one specific hour. It's more like a golden window of opportunity, a specific block of time where all the action really gets concentrated. And that's exactly what we're going to call it, the trader's golden window.
And take a look at this. This is basically your trading clock. The most opportunistic time to trade the Swiss franc is right here in this highlighted zone, from midnight to noon, U.S. Eastern Time. Now, why then? It's a perfect storm. It's when you get all the big market-moving events crashing into each other. Think European data, those crucial Swiss National Bank meetings, and then the big U.S. data releases.
But here's a key detail. This golden window isn't just one big flat period of activity. Nope. It's more like two distinct waves that build on each other. So let's break down that first wave. It all starts as Europe is firing up for the day, what we'll call the European morning rush.
Okay, so check out this schedule. The action kicks off early. We're talking between 2 and 5 a.m. Eastern when you get hit with a whole bunch of key economic numbers from both Switzerland and the Eurozone. And then, right in the middle of all that, you have the heavy hitters, the central banks. The Swiss National Bank, the Bank of England, the European Central Bank, they're all dropping major policy news. Honestly, any one of those could be the firework that sets the market off.
And while we're on the topic of central banks, we've got to put a spotlight on the Swiss National Bank. You have to understand, their power to move the market is just immense. And they have this reputation, for making big, decisive moves, often completely out of the blue.
If you want a classic real-world example, you just have to look back at what happened in January 2015. The SNB, totally unexpectedly, just abandoned its currency cap against the euro. And boom, it set off one of the most insane, violent price swings in a single day that we've seen in modern Forex history. It's kind of the perfect and maybe a little scary reminder of why you absolutely have to pay attention.
All right, so that's the first wave. But now things get even more interesting. As the European morning hits its peak, a whole new dynamic enters the picture. The U.S. markets start waking up. This creates this really powerful overlap period, something we call the transatlantic handover. And this really shows you the shift. See, the European session, that's what gets the party started, driven by local data. But then the U.S. traders jump in and the volume just explodes. This second wave, fueled by U.S. news, can be like pouring gasoline on the fire, either accelerating the trend that started in the morning or sometimes reversing it completely. It's such a critical time.
And you know what's great? The key moments for this second wave are super predictable. You can literally set your watch by them. We're talking 8:30 a.m. and 10 a.m. Eastern. Those are the big drop times for major U.S. economic news. And when they hit, you often see this incredible surge in volume.
So you might be thinking, hang on, why does U.S. news affect the Swiss franc so much? And that's a great question. It's all about the ripple effect. See, the euro versus the U.S. dollar is the single most traded currency pair in the world, by a long shot. So when big U.S. news makes the dollar jump, it sends massive waves through the euro. And that wave immediately crashes into popular franc pairs like EUR-CHF and USD-CHF.
Okay, so we've covered the when and the why. Now, let's pull all this together. Let's create a simple, straightforward playbook you can actually use for trading the Swiss franc.
First things first, what pairs should you have on your screen? Well, most of the action is concentrated in these four: the franc against the euro, the US dollar, the British pound, and the Japanese yen. Now, a little tip, if you're a day trader, you'll probably want to focus on EUR-CHF and USD-CHF. They usually have the tightest spreads, which can make a big difference.
Look, if you take away just one single thing from all of this, I want it to be this. The absolute key is to focus your energy, your charts, your trades, everything inside that golden window. That's midnight to noon Eastern Time. That's how you put yourself right in the middle of the storm where you'll find the best opportunities.
So there you have it. The schedule is clear. But let's be real. Knowing when the action is likely to happen is only half the battle, isn't it? The real test is being ready, having a plan, and being able to execute when that volatility hits. And it will hit. So I'll leave you with this question. Now that you know when to watch, are you truly prepared for what you might see?